Hey everybody, happy Wednesday. This is Noah from UrbanDigs, and I just want to share a thought that came across my brain the other day, and I thought it was very interesting, and it's a nice longer term perspective, I think. So I wanted to share that with you. Here's a historical chart showing two very simple things for the Manhattan resale market. We're looking at the resale market. We're taking out new developments. I don't want that making my numbers go up and down. So the broader market trend here, that's our goal right now, is where is the broader market trend? And this data goes all the way back to 2003. So you got a lot of good data here. And I'm going to go ahead and I'm going to draw a trend line on the bottoms of this chart on the red line. We're going to focus on the red line, which is median price per square foot. Okay. The blue lines are median sale price. The red line's median price per square foot. I like the red line median price per square foot because that's more linear price action. It's less affected by every month what types of properties close and when. Median sale price is more affected every month by what types of properties close and when. If you have a lot of large properties close in 1 month, that will have more of an effect on median sales price. So that's why I'm looking at the red line. And take a look. Take a look at what's going on here. I want to talk about this for just a little bit. I put a lot of white space here on the right side because I'm going all the way out to 2025. This conversation's looking out. Okay. And I've been saying, for a little while, I think that New York City real estate, given that it went down, well, Manhattan really went down while the rest of the markets, suburban markets, went up over the last year plus, I think there's a long runway. I also think New York City real estate's at half capacity or whatever number that is. And over the next year or two, we'll be coming into full capacity for our buyers, for our market, for our products. I also think ground floor retail, commercial, that's not nowhere near where it needs to be for a full recovery. So everything that we've seen so far is really just a local recovery. So when I think ahead, I think that we're operating at just a fraction of what we will be operating at. So I think there's a lot of positive price action. So this black line really, it shows you what I think price action is going to do over the next 5, 6, 7 years. I think we're going up, right? So we've already recovered the COVID discount. That's where we've been in the last year. The question is, where do we go from here? So now I'm looking at this trend line, and it's really, it's very interesting to see because, look, I got this bottom right over here in 2004. I got the 2009 bottom over here. We had a little break in 2012 before we really started the 2013, 14, 15 golden years of the real estate market. And then look at where it crosses. Right up here. Look at where this crosses. This is like kind of predicting support for the bottom. That's what this trend line is. If you bring this all the way down, that's fall of 2019. So like just for a moment, think about this one-off COVID craziness, right? That shouldn't have happened. It happened, right? But it's not like a cycle thing. This was telling you that the bottom was going to be in 2019. And that's exactly kind of where we were before we started coming out of it right here. And then, of course, COVID came. So when I look at this now and I look at where we are, we're over here right now. And I think we're going to be going back. You know, a lot of these cycles, they go up, they go down, they go up, they go down, but the general trend line will still be up. So again, I think that we are in a 5 to 7 year secular positive trend line in New York City real estate. And I think right now, over the last 12 months, we've been below that line and we're now quickly recovering to that support line. And I think ultimately what you're going to see is you're going to see that red line is going to ultimately go back up above that support line. Okay. And then you're going to have your cycles down and up and down and up as you go, because that's how these things work. They go in cycles. Okay. Mini cycles within larger cycles. And that's what I see when I see here. So I wanted to just put this out there, draw out some arrows and show you some things and show you the longer term trends. Nothing goes in a straight line forever. Okay. And the leverage is going to define those near term cycles. You're going to see deal volume go up and down, up and down. That's why we call it seasonality. That's what a seasonal market is the cycles, really. We have an off season, we have an on season, off season, on season, and that is within a larger cycle. So I hope this clarifies a couple things. I hope it shows you guys where we are now relative to where we've been. And I hope it shows you where I think we're going. So with that said, have a great day, and I'll catch you next time.